Hey, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with the real estate market update for El Paso, Texas in the month of May 2023. Today is June the 14th. It's Flag Day. Got flags flying all over the place, and I'll be right back with your report. All right, so we're back, and we're going to start off with our resale homes report, and here's what's going on with them. So the pending sales, they're down. That's our blue line right here, and we've got, again, a widening gap on the available versus the sold, and the sold did go up just slightly here above 500. You'll see that on this next slide, which is right here. Pending contracts are down 28.7% year over year. Down to 363 in the month of May. So if you're a seller out there and you were like, gosh, I thought we would get a contract faster. Well, guess what? There were a lot of you out there that thought that, especially when we're looking at that kind of a drop. 28.7% is huge when we're talking about numbers. Sales were down 13.4% year over year. We closed out 519 sales in the multiple listing service. That's single family resale detached homes. No condos or anything like that, just single-family detached homes. Months of inventory up 48% year over year. Now remember, we were really, really low last year. We're still low right now because we've got 1.72 months of inventory. What does that mean? It means that if nobody else put their house on the market from today forward, if nobody put their house on the market, it would still take us about 2 months to sell out of the houses that we have on the market. Now, don't think that, hey, you can wait that out, because people are still going to put their homes on the market, and some of those homes, they're overpriced for what people can purchase and will purchase because of the condition. So if you're a seller and you're thinking about last year's numbers with this year's market, you're going to need to adjust somehow in order to get the home sold. Average price is down 6.6% from $265,688 down to $248,064. Still good numbers for the El Paso market, somewhere around $250,000. Average size of the home is down 4.6%. I talked about this last month with the shrinkflation. Remember that coffee can analogy that I gave you? Homes are doing the same thing. We're at 1,836 square feet, which quite frankly, that's a good size home. You can get 4 bedrooms in that. You can get 3 plus a living room in that, or just lots of bedroom space. They're really a nice size home. Price per square foot is up 3.89%. That's part of that shrinkflation. You're paying more for less inside the home. And days on market is 50 this year compared to 32 a year ago, where people were scrambling to get under contract so that they could take advantage of those low rates on interest, where we had that cheap money, and it was cheaper. It wasn't as cheap as it was back in November of 2021, but it was cheaper than it is right now. Now on to our new homes market. We're seeing the inventory creep up on the new homes market, and here specifically, pending contracts down in that realm as well, down to 152 last month compared to 174 the year ago. That's concerning because we've got lots of inventory available. Last year we didn't have as much inventory. In fact, if you look here, it says that we had months of inventory is up 111%. That means it's roughly double, a little more than twice as many homes on the market this year as what we had a year ago. We should be seeing more pending contracts, but the buyers just aren't saying yes. But the builders, this is something that you're going to see in my 3 key takeaways, the builders are offering big incentives to the buyers. They're doing buy downs on interest rates. They're giving lots of closing costs out there. They're giving bonuses to agents for helping them sell the homes out of their marketing money. It's not coming out of the cost of the home. It's coming out of the builder's marketing money. So don't think that if your agent is getting a bonus on something, it's not tied directly to that home. It's in the marketing money that the company has, and they're able to do that. Sales are down 9.7% year over year, down to 195. Average price is up 12.6% to 323,705. That's probably the biggest reason why the sales have stagnated a little bit, because we're above $300,000, and that seems to be a breaking point here in El Paso. Consider that when we're selling at below $250 for the average on the resale, and now you're going to $323,000. $73,000 is a lot of money when you're comparing a resale home to a new home. And yes, it's got some nicer, newer features, but look at the square footage. You're not getting that much more. 1,941 square feet. The builders are probably going to have to bring that number down on the square footage in order to get our market to be able to buy those. Price per square foot up 8.1% to $165.53, and the days on market is at 127 compared to last year at 171. That's dropped because they've gotten the inventory chain unkinked and they're able to put the product out there. Now back to our months of inventory. This says that we've got 7.7 months of inventory. What that means is that if we take that finished product that's out there, standing inventory, and we've got that home that was just listed today, which is actually just a dirt lot, we got to cut it somewhere in the middle as to where your actual inventory level is, which is probably about 3.5, maybe 3.6 months of inventory, which for a builder, that's costing them a lot of money unless they're using cash, and then they've got opportunity costs that they're losing. But if they're borrowing money from a bank, they're paying interest on that, and they need to get it off their books as quickly as possible, and that's why they're using the marketing money to pay for the 3-2-1 buy downs or whatever kind of buy down on an ARM maybe, or giving out bonuses to the agents. So now current mortgage rates and refinance rates. The 30-year fixed rate is running at about 6.6 with a 6.69% APR. That's the average percent yield on the first year that a mortgage goes into place. We don't see a lot of the other ones here, but we are seeing some 7-year ARMs, which has got a 6.83%. I'm not sure why anybody would do that when you can get a 30-year fixed at 6.6. So it's an individual question on it. Maybe they can buy it down and then get a better rate like on the 3-year ARM, which is at a 6.125. There's just another nice graph on there for the 5-year ARM is at 7.425. Don't know why anybody would do that because that's expensive money. But the 15-year fixed is at 5.939. You've got to make a choice on whether or not it's worth it to pay that higher payment and only save about a half a point on the mortgage. Index returns, the S&P 500 is up to a 37.3 for a 3-year, and the 1-year is at 1.15%. We haven't received the new numbers from the Federal Housing Finance Agency to give us the appreciation rates here in El Paso. I think we're probably going to be flat for the first 2 quarters of 2023, and that's going to offset some of that 9% gain that we had last year, but it's still better than what we're doing in the stock market. Unemployment rates. This is where the real good news comes in. We have jobs in El Paso. Yesterday, I was sitting in a presentation about commercial real estate, and we are at a 0.3% absorption rate here in El Paso, meaning that there's not enough inventory in commercial, specifically the warehouse and industrial stuff, for the warehousing that we need here in El Paso. As soon as a piece of land is scraped clean, they're getting a letter of intent for a warehouse to go on that or a distribution center. We have the Marshall's warehouse open up. They've got about 500 jobs right now, expecting to build up to about 1,100 jobs over time. That's jobs for our community, and those people are going to be making money and buying homes. That's how we tie that in. We're sitting right above 4% right now, and as we look at Donna Ana, they're below 4% for Donna Ana, which is Santa Teresa, Sunland Park, and up into Las Cruces. But our region is doing very well for jobs, and that will give us more home sales in the future as we go through. Now, 3 key takeaways. Spring market much softer than it was last year, primarily due to the cost of money. The cost of money is the interest rate that the borrower is paying. Last year, we were somewhere around 5%. This year, we're at 6.5, somewhere in that range, depending on where your credit is and your debt to income ratio. Number 2, while not shown in the report, builders are offering incentives to the buyers with the buy downs on the rates and the incentives to bonuses to the realtors coming out of the marketing money so that they will give them the incentive to get the home sold. And number 3, the El Paso, Donna Ana job markets will be great over time because 80% of the goods that come through into North America come from the Zaragoza Bridge. That's what I heard yesterday. That's a lot when you think about the 330 million people that live in the United States of America. And then we have Canada above that, and 80% of those goods are coming through that bridge right over there. That's jobs for our market, and that's why people need to be investing in real estate here in El Paso. They're not making any more of it. So even though these prices may look not great to everybody, they're going to go up over time, but our job market has to grow with our wages in order to get above that 250 and stay there in the resale market and above that 300 average in the new homes market. And that is our report for today. If you've got questions about this, there's a couple things you can do. Number one, you can like and subscribe to this, and you can get updates on this as we give the monthly updates. You can call me. 915-588-1850 is my cell number. I'd be happy to visit with you about how this data affects you on an individual basis, whether you be a consumer or a builder or somebody that's just looking at the El Paso area for the job market or whatever. I'm happy to visit with you and see how we can help you into El Paso or out of it if you've got a job transfer. You can also hit me up online. patrick.tuttle@coldwellbanker.com is my email address. Shoot me a text, shoot me an email. Comments here on Facebook or YouTube or wherever it is that you're watching this, and we'll be happy to serve your needs any way that we can. Thanks for watching. God bless you. Make it a great day. Bye-bye.